Good morning, everybody. Hey, welcome to Monday. It is March 14th, and here in Highlands County, it's race week and spring break for the kids. So, hey, a lot of going on stuff, and the markets. Last week was a tough week for them, but you can see that we're excited for this week because we've got some visitors in town, and we're excited about that. Spend a little bit of time with them while they're on spring break this week. So. Hey, with that, we've got more to talk about when Dave joins us here in just a few moments. Before we do that, let me just remind you, though, there's only one thing that any of us can control. We can't control what's happening over there in the Ukraine and in Russia. We can't can control what's happening in the marketplace here, even with our stock market. But you can control how much risk you have in your portfolio. The issue is that most people don't know how much risk they really have in their portfolio. They've taken a simple risk tolerance questionnaire that doesn't really point them in the right direction. We've taken this one step further and developed our core retirement design, where we help you understand the amount of risk you have in your portfolio and help you develop a risk optimized portfolio based on your risk score. Give us a call at 863-382-0037. Hey, with that, we got Dave coming up next.
7 light.
I can only imagine.
I love that song. 8:39 here. It's 21 now before 9. Let's check in and see how Wall Street's treating your 401k and IRA today. It's been kind of a rough month so far, and indications are the roughness ain't going to stop anytime soon. Let's head down to Statler Financial Services' very own Phillip Statler, who was on the phone this morning. And Phillip, you and I were kind of bemoaning the basic lack of news that came out this morning. We've got a little bit of good news coming out of the Ukraine with the word that Ukrainians and Russians are actually talking, and both sides are saying we see the possibility of progress, but no news being good news isn't necessarily the case when they're shooting at each other, does it?
Well, that's true. I mean, there's not been much. I was surprised this morning when I got up and saw that we did have some green ink across the boards, but it seems to me like some of that green ink is, well, you said it had gone to red. I hadn't seen that, but it is back to a mixture of red and green right now.
Yeah, it's one of those tentative times right now. Wall Street doesn't know what to think. Add on one other big uncertainty this week, the Federal Reserve meeting. Reading over the weekend, my analysts, at the very least that I've been reading, it's saying it's almost universally assumed right now that the Fed will only raise interest rates by a quarter point on Wednesday. Have you heard anything to counteract that point of view?
I have not, but it's scary when they start predicting stuff like that, because if they decide to go a half a point, then people are going to melt down.
Yeah, you're right. If they don't do what's predicted, it'll end up becoming a really rough Wednesday afternoon. We know they're going to do something. We know we're going to do some tightening of the money supply. And the other side of the coin is, what are they planning on doing with their balance sheet? Because I've read nothing on that. They've been buying up bonds like chiclets for the last 3-4 years. And we don't know for sure whether or not they're going to start selling them right away, whether they're just going to stop buying them or what. And all of that's giving us kind of a touchy Wall Street picture this week, doesn't it?
It does, at least for those of us paying attention to that part of it, because that's going to be some major news that comes out when they get down to their meeting on Wednesday.
Absolutely. 2 p.m. on Wednesday. I always say when the Federal Reserve announces an interest rate decision, the market indicators start looking like a seismograph on the charts, and this is probably not going to be any difference. So you have the fact that we're looking at the Fed. They're still shooting at each other in Ukraine, and we don't have any news of any good news on negotiations there. And I was mentioning when we first got on the phone this morning, now we got something else to worry about, because Chinese stocks are starting to tank, and that's one of our other big trading partners starting to get under some pressure. You've been following the fact that the New York Stock Exchange is talking about delisting some of the Chinese companies. I was looking at the Hong Kong and the Shanghai exchanges this morning. Hong Kong is down into bear market territory over the last 6 months, and that's not good news for trading partners across the other side of the pond, because while we may be making noises back and forth about not liking each other, there's a boatload of money that goes back and forth across the Pacific.
Well, there is, and so that is, our trading partners in Asia and stuff are getting hit pretty hard. I noticed that Alibaba and JD.com, those are both e-commerce companies based in China, and they've been taking a hard hit just over concerns about being delisted from the U.S. markets. And now, on top of that, we've got this new impact of a new outbreak of COVID-19 in that Chinese tech hub area, Shenzhen, that has Alibaba and JD.com both falling. I'm looking at Alibaba. It closed down over 6.5% on Friday, down another 5.25% today.
Good heaven.
Yeah, and then you look at JD. I don't have. Well, I just have a current quote on them, or the last quote was 4 o'clock or whatever time over in Hong Kong. It was down almost 15%.
Yeah, it's kind of wicked over there. For those that haven't been keeping up with the news, there was an outbreak of the Omicron virus or a relation to it in the city of Shenzhen, which, to give people an idea, it's like a city of like 5 million people, and the Chinese government takes absolutely no prisoners when that happens. They've locked down the entire city of 5-odd million people. Not only does that screw up Alibaba, but Foxconn and Unimicron both have plants there too. They supply parts to Apple just in time for Apple to have announced that new iPhone SE. So that's screwing up shipments to Apple and another major U.S. company as well. There's more going between these two countries across the pond than we sometimes appreciate.
Well, that's true. I mean, let's face it. A lot of technology stuff comes out of China, and so this is a big deal. And could cause us some issues. I mean, I noticed that I was reading an article about Ford, and Ford expects, that the U.S. auto are going to be down. They think they'll be down by 100,000 units of production already, just because of part shortages this year. And so that's going to hit a lot of industries, not just the auto industry, but the computer industry. I mean, there's a lot of things out there that that this relationship between us and China, Hong Kong, all of those countries, from a tech standpoint, are and could very well be problematic.
Now, when you start
Than what they
one
have
of the
been.
big three automakers talking about it being down, you got to remember that's down from an already pretty crummy level with all the chip shortages we've had in the last year anyway.
That's right. You're right, and that's so it is going to it's going to change our world.
It really will. We're just merry sunshine all over the place this morning, Phillip, partially because there really isn't anything out this morning. No pre-market earnings releases to speak of. No pre-market macroeconomic information to speak of. It's going to be a relatively busy week because in addition to the Federal Reserve announcing their decision on Wednesday afternoon, we're going to get another inflation thing, I think, on Tuesday with the producer price index, aren't we?
Yeah, we will. The final demand number comes out for the producer price index tomorrow morning, so we'll have that to talk about.
And that'll give us another indication as to just how bad inflation is. Producer prices have a tendency to lead consumer prices, and by and large, we haven't been too happy with what we've been leading into.
No, we really haven't. It's been showing us that what we already really know, right? Inflation is here, and we're feeling it, and those numbers continue. The other thing that comes out this week, Dave, is Wednesday, and this will be a big deal. Is retail sales comes out Wednesday morning, and that's going to be important to see how February retail sales will really kind of shook out. My forecast is up only 0.5%, so. Anything less than that is not going to be good news for the markets.
Absolutely. We'll cross our fingers if it is bad news. The Federal Reserve does what they expected because we certainly don't need a double whammy on Wednesday. Have you ever read anything as to whether or not the things are a fait accompli for the Federal Reserve or not? I mean, if the producer price index ends up becoming way over what we expect, I wonder if that indicates the Fed could backtrack and do that 0.5% they were talking about earlier.
I haven't really read anything on what those things could look like or will look like. but you know, it's fluid, and especially when they start meeting, whether I think they start meeting tomorrow, right? Because they meet for like 2 days.
Yeah.
So it is, all eyes are going to be in that direction this week until we kind of get their indication of what they're going to end up doing.
Absolutely. And this is a major market mover one way or the other. Like we've always been saying, when interest rates start eking up, the more interest rate sensitive growth stocks on NASDAQ and the Russell 2000 tend to suffer on the downtick from that, simply on the grounds that it affects their operating budget a little bit more. And NASDAQ hasn't exactly had a kind period of time going on. Setting the table from Friday, the Dow was off by another 229 points on Friday. We're starting the week under 33,000 on the Dow. S&P was down by 55, and the NASDAQ is down 286 on Friday afternoon. Looking at the news-free Monday, everything being relative, Philip, what are we looking at 45 minutes before the markets open this morning?
Well, you know, it's a mixture. Again, like I said, the Dow is up right now 0.5%. The S&P 500 is up 0.3%. The NASDAQ 100 is heading down. It's down $15 right now, which is a little over 0.1% down. On the commodity side, we are seeing a retrenchment across all sectors. Silver's down 2%, down below $26 again. Gold is down 0.8%, down below 2,000, and crude oil is down 4% today, down just barely below 105 at $104.91 a barrel.
I never, like I said earlier last week, I never thought I'd find myself happy when I said it was under 105 a barrel. Did you?
No, I definitely not.
I topped off my little four-banger Nissan yesterday just because I know with race week ahead it's going to be a busy week. Just a half a tank came to $30 in a little four-banger compact. It was Overseas markets, the Chinese REM market were not happy whatsoever. Japan had a decent day on Friday, early this morning. Chinese composite, though, was down 2.6%. We were mentioning that they're just absolutely getting hammered, and the Shenzhen shutdown isn't helping a bit. Hong Kong, a full 5% at the close. European markets are kind of mixed. Fractional increases in Great Britain and Germany. France is off fractionally halfway through their day. It's completely uncontrollable what goes on in the world sometimes. Shenzhen shuts down and half of our stocks end up suffering, and then who knows what's going to happen in the Ukraine. Stability in a retirement fund counts for a lot, Philip. How do I find you to find some stability?
Then give us a call at 863-382-0037 to schedule a time where we can walk them through our core retirement design and help them design the retirement they always dreamed of. And then catch us, well, I don't know. Are we on this weekend, Dave?
Well, Saturday morning at 6, but we've got the race on Saturday, so we're going to miss you at noon on Saturday.
That's what I thought, but I thought I better double check there. And then we'll be on Sunday morning at 10. Join us then on Highlands News Talk 730 and 95.3 FM.
Absolutely. We're just going to take Saturday noon off for the race because, well, it's big stuff, don't you know?
Absolutely.
Thank you very much, Philip. We'll catch you tomorrow, all right?
All right, bye-bye.
Be well. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.
Again, folks, I want to thank you for joining us today. I hope that you had a great weekend and that you have a great week coming up. I hope you'll join us again tomorrow morning, same time, same place. Until then, take care. Bye now.